Hello, guys. Welcome back to my YouTube channel. The name is Send Asante, and I love you. If you find yourself here, you are not at the wrong place. We are here to steady build ourselves and also help ourselves. If you have not subscribed to my channel, feel free to subscribe to my channel right now. Just click the subscribe button so that in case any of my videos are being uploaded on YouTube, you will get the notification. If you have friends who study accounting, if you know friends who are into the accountancy, let them know, share the links with them, talk to them about CNS Asante. Let's build our journey together, and I know that you are going to be blessed. In my previous video, we did justice to the asset, liability, and capital and its relations. And then today we are going to be talking about the qualitative characteristics of accounting information. But before that, I want us to briefly brush through what we learned. We said that assets is equal to liabilities plus capital or equity. And please be well abreast to the fact that asset can be equal to liabilities alone, and asset can be equal to capital or equity alone. Why? Because there could be times where there was no introduction of capital. There could be times where there was no introduction of liability. So it means the asset will be equal to just capital or just liability. Let's be well abreast with that information. Okay, so for example, let's say business one. Business one. Let's say we have four businesses. Just example, then we close with that one. Move to our topic for today. Then let's say business one. We don't know the asset that he have. Then let's say he has a liability of 100,000, right? Or let me just make it 100 cedis plus a capital of 150 cedis. Then business two has an asset of 80 cedis, a liability of we don't know, plus a capital of 32. Then business 3 has asset of 50 cedis, liability of 21 cedis, then plus equity we don't know. Then the last business has 85 cedis as asset. Then it has dash plus negative 10. Somebody will say, why would equity or capital be negated? There could be instances like that. That will actually mean that the liability of the company is higher than the assets, so it causes the equity or the capital to be negated. So from here, if you check your calculations, I did some calculations, and I think here is going to be 250 looking at this. Then here is going to be 48, right? If you do your additions and subtractions, here is going to be 29, and then is it 29? Yeah, and then here is going to be what, 95. So just a summary of assets equals to liabilities and capital. All right, let's now move to our major topic for this section. Now, with our major topic for this session, we are saying it is called the qualitative characteristics of accounting info or information or business transaction. Why are we saying that it should be qualitative? We are saying that there should be some qualities of accounting information. There should be some qualities of accounting information. All right, it should have some qualities. Okay, every accounting information needs to have some qualities that would second the information, that will let us know that the information is legit and can be trusted. Are you getting it? That it can be trusted, it can be reliable. Are you getting it? Yes. So that is what we mean by qualitative characteristics of accounting information. We have two of them. We have number one, the fundamental, and number two, we have the enhancing. Okay, we have the fundamental and then we have the enhancing. I think under the fundamental we have four, and then the enhancing we have under the fundamental we have two, and then the enhancing we have about four. Okay, so what we are doing here is that your information should be reliable. So what should be in the accounting information that will show us that this information can be relied on, this information is true and fair. I mean, we are saying that it should have fundamental characteristics and it also have enhancing characteristics. Now, let's now look at fundamental. With fundamental, we are looking at one, relevance, and then so we are looking at relevance and faithful representation. Okay, this is another introductory part of accounting that normally comes even in your corporate reporting, CA students, even in your financial reporting and your introduction level one, the level one student, financial accounting. Some of these things can even fall in your financial introductory to financial accounting at the university level and everything. So this is the basic that you must learn, and some of these things you must get it right from the beginning because it's easy to score marks on these ones. So we are saying that there should be relevance and there should be what? It should be faithfully represented. Now let's talk about relevance. When we talk about relevance, what do we mean that the information should be relevant? It should serve, it should serve their needs. Who is their? It should serve their needs. Who is the their? Okay, we are saying that relevance, the accounting information should be vital, it should be important. How is it supposed to be important? It should serve the needs of the users of accounting information. It should serve the needs of the users of accounting, because all we are doing here is for the users. So if it does not serve the needs, if it is not suitable to the needs of the user of accounting information, then it's not relevant, it's not important. Okay, it cannot be relied on. You see, it should be relevant. It should what? Serve the needs of the accounting, the needs of the user for accounting information. That's what we mean by relevance. Also, when we talk about relevance, you can also say that it should be able to make difference. It should be able to make a difference. All right. I want to make I want to make a decision. You are giving me information. The information you are giving to me should be able to make a difference. All right, should be able to make a difference. That is what we say it should be relevance. Of course, you cannot talk about relevance of an information, accounting information, without mentioning these two things, the values. We say that an accounting information is relevant, okay, when it has a predictive value. So it's supposed to have a predictive value or confirmatory value, or both. So we are saying that it should have a predictive value. We are supposed to be able to predict with this information you have given us. We are supposed to be able to predict the future, or with this information you have given us, it's supposed to confirm what we predicted in the future, or it should have both. That's what we are saying, that if these things happen, it talks about the relevance of the information. So in exams, the reason why some of you don't get the full marks, you just explain relevance means so and so, and you go. But you're supposed to talk about all these things so that you'll be able to what? Get the full mark. We are supposed to talk about all these things so that we should be able to get the full mark. And you cannot talk about relevance without adding materiality. 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 We say the information should be material. All right, it should have materiality. And now materiality is relative. What can be material to a company will not be material to another company. So with that one, we say that it is relative. But you cannot talk about relevance without talking about materiality, the materiality of the accounting information. Materiality is relative. For example, I used to tell this to my friends when we were back in the university that imagine that, let's say, for example, my hospital here, auditors have come and they've realized that there are some discrepancies in some part of the accounting information that is involved with amount of 10 cedis. A big hospital like Oak Specialist Hospital, that amount is irrelevant. That amount is not material. Okay, but imagine that our average traders that are in the market go to that place and go and joke with 10 cedis. You understand what we mean by hard economy. You understand? So that is why we say that it is relative. Let's talk about faithful representation. Faithful representation. The information should be faithfully represented. In the exams, don't go just go and just write faithful representation is that the information should be faithfully represented. You've just said the same thing. Talk about what they need to know. We have about 3 or 4 things when we come to faithful representation. The first one is that the information should be complete. The information should be complete. Information that you are giving the users of accounting information should be complete. Don't leave anything out, because if you leave something out, it will influence their decision. They will not know. So it should be complete. Everything that you are putting there should be complete. I always say that sometimes when we publish other businesses and you see that some business is making profit, but they don't, there were some things that were not included. Related parties, there were some things that were not included. Maybe somebody that has started this business that you think is going to make a profit, the place that the person was doing it, the place the person was, he didn't pay rent. Maybe the mother gave it to them, you understand, and they didn't pay rent, but you are going to pay rent. So it's going to influence you. You may think you make profit, but by the time you enter the business, so we are saying that it should be complete. The information that you give us should always be complete. Number 2, it should be neutral. Okay, it should be neutral. The information must not be distorted by emotions and what you feel like should be and what you don't feel like. No, the information should be as it is. It should be neutral. It must not be influenced by any emotional conflicts. Are you getting it? It should be neutral. We're talking about faithful representation of accounting information. You can also talk about it should be free from error. Free from error. Free from error. We are not saying that accounting information may not be mistaken, or we are not saying that there cannot be errors in, because that's why we create suspense accounts and all those things. But we are saying that errors that you can neglect, errors that you can do away with, let's do our best. All right, because every error, if it is material, would have influence on the users of accounting information. So let's do our best to make sure that the information is free from error. And there are a lot of there are types of errors. We will come there as and when we. So let's be able to reduce the errors in the information, accounting information, and that will be able to help our users. Now let's talk about number 2, enhancing. The enhancing aspect. The enhancing aspect of characteristics of accounting information. All right. Number 1, comparability. Comparability. The information should be able to be compared in 2 ways. Number 1, in 2 ways: previous year's financial information. Previous year's financial information. So the information you are giving us now, we should be able to compare it with your previous statements, your previous informations. Are you getting? In the same industry, in the same business, we should be able to compare with your previous years. And number two, we should be able to compare with rivals. Rivals. Okay, the financial statement of your rivals in the same industry, you should be able to be comparing with it. And to be able to do this, you must be consistent. Let's talk about consistency. Consistency. Well, I'm not saying that you must be consistent. You cannot compare things when your accounting methods are not the same and consistent through the years. You don't use this depreciation method this year and the next year use reducing balance, the next year use straight line. You should be consistent, because we say that we are seeing that the accounting year has a foreseeable future. So you should be consistent with things so that you'll be able to compare, all right, both the industry and then also whether horizontal or vertically. You should be able to do that. You should be able to do that. That is about the enhancing. Number two, we can talk about verifiability. Verifiability. That is why in the beginning we started from bookkeeping. Before an accounting, before you see the statement of financial position and the income statement, it started from somewhere. They were classified and grouped. They started from source document. You move them to the various accounts. So it has every track record so that you verify. It must be verified from the source books and from the source document. So it has everything that it needs to be verified with, so that when auditors and these regulatories come, they'll be able to what? Confirm. The information must be verifiable. That is when we say that your information has a good characteristics. Your information has a good characteristics. Then again, we can also talk about the fact that number three, all right, we can talk about let's see, timeliness. Some time ago I was watching Fog tutorials. He has been one of the best people that have blessed us in our university days. He was talking about timeliness and he said he used to mark papers and people write timeless, but it is timeliness. Okay, so timeliness, the information should be presented on time. When we need it, it should come. You don't present a statement of financial position of 2020 in the year 2026. Oh no, what do we need it for? It should be on time. It should be on time. As and when we need it, it should be on time. Timeliness. It should be on time. Then understandability. Number four, understandability. Users must be able to understand it. That's why we even do ratios and then interpret the ratios and everything. Users must be able to understand it. It should be in the right classifications and it should be stated clearly. That's why even when you see financial statements, sometimes you have footnotes that will give you more understanding, because we want the users. The reason why we are doing all these things is for the users to understand. So it should be able to be understandable by the users of accounting information. Some people also tend to add reliability. Your information should be reliable. Ladies and gentlemen, today we spoke about qualitative characteristics of accounting information. We looked at the fundamentals and the enhancing. Under the fundamental, we say there are two, which is relevance and faithful representation. And we talked about the meaning of relevance to serve the needs of the users of accounting information and make a difference. You must also talk about the predictive and confirmatory values, and then materiality. Then you move to faithful representation, how that it should be complete, neutral, and free from error. Then enhancing, we have the comparability, we have the verifiability, timeliness, understandability, and reliability. Ladies and gentlemen, today I'll be ending my lecture here. If you have any question, you can put it at the comment section or contact my number 059 1686149. And also Don't forget to subscribe to my channel, share with your friends, and let's learn together. The Lord bless you. Have a wonderful day.